Hey traders, welcome to the market update here from Marco and the founder of Trade and Train. We're going to look at primarily pound pairs and a little bit of the Dow, and we'll start here with the DAX. The dollar index, forgive me. Okay, so primarily this market has been rotating around the 97.50 area. I've put the black solid horizontal in here for you to take a look at and highlight where we've seen the market retrace from. Now you can see that we've seen this sort of movement, this rising wedge formation, where the market has been respecting and working to and from. But 97.50, 97.40, just through here. You can see this on a weekly chart. If I drop this down now to the daily chart, it'll just become a little bit more clearer and you'll be able to see those intricate cycles a little bit better. So just squeeze this data in and move the chart up. So what we're looking for now is you can see how this market formed a triple top here just above the 98 even handle and then came back down, and we've seen multiple tests through here. This is 97.38 and it's come up to 97.64, and we're probably going to come somewhere in this region again as we're seeing a little bit of dollar strength at present, although through the month of July we usually see a seasonal bear period kick in sort of end of the second week, start of the third week. So this will be a really nice area to take advantage of some short opportunities. So where can we best take advantage of selling the US dollar? Well, the other couple of fundamental facts are we're probably going to see a rate cut come in at the end of the month. So that should add some downward pressure to the US dollar. So let's focus on some of these pound pairs. So I'm just going to come over to the pound pairs right now. So if we look at cable, we'll scroll right out and you can see down here we've seen the market taken around 125, and then we saw this spike low down here towards 123.80, and then if I just zoom out we can see the bigger picture. Let's just go out to the weekly. We can see how, if going back right the way through to early part of 2017 and back end of 2016, we can see multiple tests of this ascending trend line, and you can see that as of this week's candle we are actually breaking that. Now the question is, will this be a false break where the market has, let's say, impulse movements to take out most traders' stops before then we see the stop and reverse, which if you look at any sort of key structure area, you'll see here prior to the market turning at this point here, you got a final push of the market going through, trying to basically trick all those long-term trend traders into the next impulse movement up before we start the new fresh move down. Looking here, you see the market came down, took out all these lows here, and then started the next new move up, and again we see this big bullish candle and the next move came down here. So it wouldn't surprise me if this is what's going to happen right now, and the reason I'm talking about this is because it's not just on a £1 chart. You'll see here I've highlighted a COT buy, so we got a COT signal. If you'd like to know more about commitment of traders, well then drop me an email at mark@tradeandtrain.com. Now what we're seeing is this is where the signal started. So we've got a couple of options we can look at here. Is the counter trend line, look for a break above. We've got a break above last week's high. Look for changing cyclical patterns on smaller time frames. So there's multiple ways we can look at entering this market. If we take a look at pound Swissy now, we come across, we'll stay on the weekly chart, we're not going to go anywhere else. So we're just looking at the higher time perspective here. You can see multiple structure points here right down at the 122.70 area, basically heading down to as low as 122.40. You really want to be looking at buying this market because there's not much downside value to this. If we break through this area, well then yeah, we're probably going to head down towards 121 and maybe even as low as 120. But as it stands, I'd be looking for reversal patterns, looking for the market to change its cyclical mind and shifting sentiment. This all goes in hand with the commitment of traders signal we're looking at. And you can see that this market has fallen from 134 down to 122, so that's a 1200 point drop. So anywhere, even if it goes midway into the midway retracement, 50% retracement, you're talking 600 points, which will take you up in towards the 128 area. So definitely looking for pound longs at the minute. So that's pound Swissy. We've just looked at cable. We're going to look at euro pound now, and you can see here we've got one test, multiple tests here. We've seen the market stuttering and stalling. Let's just zoom in a little bit. You can see how it's been getting very wicky. Look at all these wicks, especially when it came into this area here. We've seen the wicks again in this area. We can drop down, we can look, and if we just go across, we're sitting at that same area again. You see multiple structure points here. And this to me is probably going to be a final push, trying to trick all those long traders in, maybe even anyone that was looking to get short, take them out of the market first. And we'll be looking for either counter trendline breaks, changing cyclical patterns, shifting sentiment, you name it. We'll be looking, we've got various different techniques of getting into these markets. If you would like to know more about those, then obviously simple way is drop us an email at mark@tradeandtrain.com, join the free Telegram group, or even better, join us at the Live Traders Club, where you get daily trades, charts, information sent out, kept right up to the loop every second of the day. So that's euro pound we've looked at. Now moving on to some of the oceanic pairs, so pound Aussie and pound Kiwi. Again, these markets, you can see weekly chart, we've got some nice clean touches here. We're pressing through, potentially going to be another false break of what is seen to be the ascending trend line. I'd like to see this market potentially bounce up here. Aussie dollar, not so much, but Kiwi is definitely bearish through the back part of July right up until the early part of September. So pound Kiwi, I'll definitely be looking for some longs for over pound Aussie. But again, we'll look at this. You can see the CTL through here. If we drop down to the daily, you'll see it's a pretty big bearish candle right now, but any sort of buy stops above today's high will be a signal for us on this market come tomorrow. Pound Kiwi, similar sort of move. Let's go back to the weekly so you can see the analysis. You can see we've got 1, 2, 3 very clean touches. We're testing that same area again right now. So it does represent a really good area to be getting long in this market. If it's too aggressive for you buying at current price, then don't forget, use your CTLs or look for change in cyclical pattern. But this is a great area to be looking to get long. If you want to be looking at your 127s, you can see 127 comes right up into just over the 2.0380, comes straight in at structure highs here. So if you're looking for investment style trading and holding for the longer period, then that wants to be your extended target. Okay, so that's pretty much it from the pound pairs. Let's take a look at the Dow. So right now we are in earnings season, which means the markets are basically for the next 2 weeks as of yesterday releasing all their earnings reports, and it is widely expected that 77% of all equities that are releasing their earnings per share are going to be missing Wall Street's forecast. So expect to see some pressure on the Dow and see where it could potentially stumble down to. I'm just going to go up to the monthly chart because obviously I want to show you a little bit of higher time frame analysis and where to get your bias and viewpoints from. The Dow has pretty much been flying away, you know, whether it's artificially manipulated by keeping interest rates low and all the company buybacks that are going hand in hand right now by keeping interest rates low. You know, there's obviously a couple of things that the US are trying to do, but a small correction right now I wouldn't be surprised at until we see the rate announcement towards the end of the month. So I expect to see at least a 50% or maybe even just a 38% correction back down in towards these highs here, 26,600. But if we drop all the way down to the daily and we look at the last impulse move up, and then we just drop some fibs on just to have a look from the swing low up to the swing high, you know, you can see the 38.2 comes in at 26,350. The 50% retracement comes in at 26,000 on the dot. We look through those numbers, you know, and we can see some clear structure at 26,000. So I won't be surprised. We can see the Dow losing momentum. Look at these big bullish candles here, then small inside, small candle yesterday, small bodied candle. Today, obviously, we've still got quite a lot of time left during the US session before this daily candle closes, but we failed to take out yesterday's high, and potentially we're going to fail out to take yesterday's low, meaning we're going to have an indecision candle. Therefore, we would then expect at this sort of structure point that the market is potentially having a shift in sentiment, i.e. from buyers building up all that progressive momentum, taking price to new highs, to just basically fading and coming out and taking their profits out of the market, to then see that correction, which will be a nice cyclical pullback before we can then potentially get the next move up. Or if we are going to see a bit of a correction or a recession that's been mooted around, who knows, but I do see that we're going to see a short-term correction anyway, looking at the Dow. If we see a correction on the Dow, we should see some rallies in from the safe haven markets. So looking at gold, you know, we should expect to see gold take a little step up. Let me just remove all of these drawing tools. We should see gold potentially push up to the highs again if we are going to see a correction on the Dow or the S&P. It's just the money flow from moving from risk on into a risk off. Okay, so that's it from myself, Mark Owen, today at Trade and Train. We will be keeping you posted and updated with any more information and charts. If you've got any questions about today's video, make sure you drop that in the comments section below. And if you haven't yet already joined our free Telegram channel, please do so. I'll put the link in the text below. If you like the information, please make sure you hit like, share and subscribe. By doing that, it just means all our videos will come straight to your inbox and you won't have to mess around by coming to YouTube. Okay guys, have a great trading day and we'll see you later in the week. Bye bye.